Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, March 7th, 2016. I'll take a quick look at the shipping stocks. There's quite a lot of movement in the sector, and what I wanted to go over with, I just posted these the other day as some potential long setups poised to explode higher, and that's exactly what happened. And read the notes if you haven't done so already, or let me just impress upon this if you're not going to reference the notes. I mentioned the other day that of all the sectors I've ever traded, over the years, there's nothing as volatile that can move so fast up or down in short order, such as the shipping stocks, even more so than the miners. So I know everybody, just about everybody listening to my voice right now is very familiar with what Dust and Nugget can do in short order. And those are three-time leveraged ETFs, and they pale in comparison to what the shippers can do. We'll go over that. And I wanted to, again, so my point to impress here is, unless you're an aggressive trader, don't even consider these stocks. These are fast moving. And if you do trade these, or at least my suggestion and what I do is beta adjust your position size. In other words, adjust it down to account for not only the above average gains, but the above average risks. If you're trading these things, you're not looking for 5, 6, 7% moves. You're looking for often 50, 100% moves, and it's not uncommon to see that happen within a week. And we've seen that recently, especially, over a couple weeks. So again, if you can, tolerate that volatility, even if you take, your position size down to a fraction, maybe a quarter of what you might normally trade or even less. If you make a 30, 40% gain on these trades, that's comparable to making a, 5 to 8% gain on a regular stock. Dollar terms I'm talking, because that's the important thing here. It's the dollar losses or gains that I really focus on, not the percentage gains, because you can only afford to lose so much in your portfolio to really do some damage. So enough on that. I just wanted to get that disclaimer or a cautionary note out, if you would. All right, so let's take a look at what's going on in the sector. This is the 4 days ago. These are the ones I posted in the trading room. Let's just look at what these things are doing. And the reason for this video is I think there's opportunities now on the short side. So a lot of these stocks have hit resistance levels or targets that I was watching. So the first one, we have a chart NMM up here. This one was posted as a breakout over $1.25. You can see this is the line that I had. I didn't have time that day. There were so many out there, and I wanted to get them out right away because they looked ready to pop, and they did. I mean, right after that. This one was over 125, I mentioned, so I have to grab that line there. That so far went up to about that level. If you look in the upper left-hand corner, that's about a 40% move in just a couple days. 2 days since that breakout. This is what's going on today. You can see these are some of the names I mentioned. I mentioned Eagle. That's up today alone 120%. So I think the point here I'm trying to impress is there's nothing like these stocks. And I mentioned Eagle. I'm looking on another screen right now, over 81 cents was the breakout, and that was a line I had. Actually, it's not drawn on this chart. I was just eyeballing. That was over that level. I was waiting till these reaction highs were taken out. So from 81, let's try to get it. No, I'm trying to grab it here. If I grab that line and use a measuring tool, it'll move the line like that. So let's just get out of the way. Where's 81? Right here. It's hard. You got to click right on it and then move. That's 82, a little under. So this will understate the returns, but just today, that stock hit a high of about 348, and if you look in the upper left-hand corner, that's 326% in just a couple days, folks. So, all right, you get the idea. There's nothing out there that I'm aware of, single stocks that can move anywhere close to what these shippers do, and that's why I refer to those as potentially explosive breakout candidates. And this is not uncommon. They don't do this all the time, but when they're poised to move, you can see, and it works both ways. This is what I'm talking about. Look at this drop here from almost $4 all the way down to 45 cents. Point here is there's some trading ops. That was a resistance line right here. If and when it gets to that downtrend line, which they probably will, because I got to take in time frames here. Longer term, the charts are bullish, and that's why I was looking for these reversals, especially with the risk on trade back on right now in the markets. Everything, all these low price beat down stocks are popping like mad lately, energy stocks. But you see this price from here to here making that divergent low, a very much lower low in price, with the MACD here making a higher low. i.e. positive or bullish divergence. So that's signal number one, that you're looking for a trend reversal first and foremost. And then you have a stock, basing here, tapping up against that level, and that's all it took. And like I said, these are just the momentum players love these stocks. So far it hit a high there, and it's pulling back, and it'll probably continue to pull back because these stocks get a little ahead of themselves. If any trades, and I put one on today, I'm about to probably add a few more after this video. These are only very quick pullback trades. Any of these lines can serve as horizontal support or pullback targets. And I can tell you, technicals work very well with these stocks. When you have the momentum traders in, they're eyeing the charts. They're eyeing the same patterns that I was eyeing, and that's why a lot of these popped on those breakout levels I talked about. So there's Eagle. Ideally would have been right here. I've had a lot going on today, and I'm just now getting around to reviewing these shipping stocks. So I still think it has a little more downside, but that's probably the objective area. Let's look at the next one mentioned here. Let's grab the list. Okay, DSX, that's Diana Shipping, DSX. I mentioned that over, let's see here, go back to that, DSX over 280. See, because I had a line at 279 horizontal resist, nice base there, and it broke out of there. And so once it took out 280, try to capture that as close as we can. There's 280. From that point, capture the high with that line. That shot up 30% in just a day or two. It also took out this downtrend line. That's bullish. However, there's resistance, and this is the one I just shorted. This one at 350. Punched up through it. Keep in mind, on a lot of these stocks, you guys often hear me use the term momentum-fueled overshoots. All these terms I make up, and that's just what I'm looking at. Like the miners do it a lot. In other words, if I'm trading a stock, especially these what I call Momo stocks, where the momentum players get in there, and when they're moving up so fast or down so quickly, they often, very often, not just these stocks, any type of stock in a very fast uptrend or downtrend tends to overshoot support and resistance. And like I said, I call it a momentum fueled overshoot. So I almost expected that, and it's fine that it took out that 350 level. My stop will be a little bit, I'm going to give that one all the way up to here. I took a small size, but there's a solid resistance level up there around $4. And again, I'll allow a slight overshoot, and that'll be it. Overall, again, you look at the bullish divergences on the RSI, the MACD, but what I see is I think this is an overshoot today. This looks like a large rising wedge pattern that needs to have a little more work. So I expect this stock to come in, and I'd like to ride it down to about just above that 238 level. But it depends. If I'm looking at everything, I watch a lot of stuff. I'll watch the rest of the shipping stocks, and I might just cover on a back test here if I'm not stopped out sooner. So there's another trade idea, DSX. All right, next up on the list, what do we have? NM. I said a break over 97 could bring it to 114. Let's look at NM. There's that 97 level, went right through 114, and now look, it's coming up on a very solid resistance level, this 175 level, and we're just shy of it. And, again, I keep an eye, when I trade a stock, especially in a sector that's moving, I don't focus exclusively on this chart. In fact, I put, I'm watching them all. So if the vast majority, especially some of the leaders in any industry, whether it's the miners or anything else, they're coming up at resistance, or I already see them being rejected off resistance, that might indicate to me that NM might fall short, even though it hasn't hit that level. That level is like a magnet, and if the sector continues to move higher, I would absolutely expect it to be hit, but it may fall short. So, one option is it's about $1.60 now. That's $1.75, maybe $1.80 if you allow for a little momentum overshoot. If you can tolerate a 20% stop loss, a 20-cent stop loss, I should say, which is significant on a $1.60 stock. But the minimum pullback target for me would be this gap, yesterday's gap, and that's down to about the 130 level, the top of that gap. And I wouldn't be surprised to see it come back into at least that 114 level. So there's another one. I could probably draw a nice downtrend line here, and you can see that downtrend line, this is just, to me, very solid resistance. You have a downtrend line intersecting with horizontal resistance right about, 175. So there's an idea there as well. And, if you wait for 175 to short, you may not get that entry. It could keep going through there. Remember, these things, once the momentum players get in there, fewer things can become more overbought in the near term or oversold. as the shippers. So again, just uh, if this isn't your cup of tea, stay away. Maybe watch these. This is a great learning experience for newer traders. But you can see, like I mentioned on these, I'm drawing out the divergent lows, which means that if I, whichever of these stocks I decide to short at this point, it's only just for a quick pullback trade. And if it doesn't work out, I'm not going to hold out for a long term, because this is longer term bullish, and tells me that these stocks, maybe they need to consolidate or digest these recent run ups, these strong pops here. By digest that, I mean, work off the near term overbought conditions, and then maybe move up higher over the in the coming in the coming weeks or months here. Next one up was GOGL, Golden Ocean Group. On that one, I said there were several charts, so I didn't get the time to post it all. A lot of levels I was watching. It was down here the other day below this first level, so it took that out. That was resistance around 62. Has a downtrend line here. Took that out, but that's a pretty solid resistance level there. It tried, just like it did back here. It recently today tried to punch up through it. Looks like it failed at the that yellow line, the 50-day moving average. So that 80-cent level is a key level. I don't have any desire to short this one because it took out this downtrend line too, and the downside is not as much as some of the other ones that really got away here. So that one I really would stay clear of right now. And the next one up is Paragon, PRGN. I said a move over 375, PRGN. Let's pull that one up. 375, I must have been looking at that downtrend line. There might have been a horizontal level there. I'm trying to get this out quick. I haven't marked up all these charts. That's 316. Actually, you know what, that one, because that one hasn't taken out that low. It took out this downtrend line, but it still has this one here. We're right at downtrend line resistance. So the theme that I'm trying to impress here is longer term, these look like stocks in a sector that's probably bottoming, and we'll probably take these levels out. But it's just a case of possibly a little too much, a little too soon. Now, remember, I also thought that on the miners. I was long the miners at that recent low. Went up, took a lot of profits, and then started trying to catch a top, figuring that they at least needed to pull back, and that top, maybe it's here now, maybe not, but it really never materialized for much more than just a couple quick day trades, pullback trades. And that may be the case with these shippers. Again, they can continue to get overbought beyond levels where most people can even imagine a stock could go in such short order, as we've seen here. A lot of these stocks, this one's just in, that short period of time is up 300% in the last week or so. Next one up is KEX. I had already posted that earlier that day as an official trade idea, and just recently we already hit the first target. Still a nice looking chart. No desire to short that one, but nor would I add at this point, because that's still horizontal resistance at that first target level. And keep in mind, I always set my targets, price targets, below the actual resistance level. If I hold the cursor here on that white line, as you just saw the box pop up, that may be to the right of the screen. That line's at 65.18. And I'm sorry, 61.76. My bad, 61.76, and I set my target at 61.55. Because I don't want to be long and risk a reversal that happens just before the actual resistance level. That would be the next potential target zone. Although I took that off as an official trade, these just got a little stretched, and I'm sort of in a hit and run mode right now on the long side, as I mentioned, just part of my overall bigger picture. This risk on trade could end suddenly and abruptly, because there is still a lot of evidence that points to the fact that this very well may be a bear market rally, and this is just typical bear market rally behavior. So I don't want to be the last guy holding these when the music stops. I'd rather, get my profits and run, and I can always redeploy that capital back into these trades or something else. Let's say KEX comes and makes a back test of this trend line here, and the shipping sector looks strong. Then I can buy that stock back at 56, 57, somewhere around there, maybe even lower, and for the next push up, again, if the charts confirm at that time. Okay, the next one I mentioned was SSW, back testing the 1741 resistance level. That was this line right here. Again, that pop-up box may be just to the right of the cutoff on the screen capture software. This isn't my entire monitor screen, but it says 1741, and we were back testing it when I made that post, And as you can see here, I said it would take it up, if that back test held, which it did, it would take us up to the $18 level. You can see that line's at 1801. And we did an intraday, momentum, or 1 day momentum fueled overshoot, but we came back down. Like I said, that's an overshoot, momentum fueled overshoot. The resistance level, you can see it go back here, numerous reactions here and here, and that's what defined that level. So that one's pulling back. And again, that's why I'm looking maybe for some quick pullback ops for you, what I refer to as gunslinger trades. Traders who are nimble, aggressive, experienced, comfortable with these stocks. I'm just sharing these ideas for you guys and gals. Okay, next one up was TNK. And that one I said best to wait for a continued move down to the 340 to 330 key support zone. That's right here, these lines here. It was trading at 368 at the time, and you can, just so happens that's one of the few that didn't explode. It's not much above where it was at that point. So that one again, I wouldn't buy it, nor would I short it here either. Okay, next one up was STNG, Scorpio Tankers. And I mentioned there's a nice IHS. That means inverse head and shoulders pattern. Inverse head and shoulders are reversal bottoming patterns. They come after a prolonged downtrend. And it's just like a head and shoulders topping pattern upside down. And let's draw it out here. What you have here is you have this would be your left shoulder right here. And this is the neckline, that white horizontal line ahead. This is your head down here. Did that wrong. Let's try it again here. Let's draw the head out first, right here. There's your head. There's your left shoulder. Here's your right shoulder down to that point and brings it back up to the neckline. So you have a head and shoulders. And your trigger would be a break above that neckline. So there's one that hasn't run away yet, and that would be your entry. Sometimes you might want to wait for a 60-minute close. If you wait for a daily close, see the tough thing about these, if you do wait for a daily close, it's a daily chart here. When this thing pops, if it's a real deal, it's going to rip, and by the end of the day, it's probably going to be all the way up here. If the sector still has that momentum. Keep in mind, if it doesn't, be leery. And what you can look for if you want to take this on an intraday break is look for above average volume to confirm the breakout. And with that being said, you might want to wait for at least maybe a 5, 10, 15-minute candlestick close above. And then if it fails, just set your stops somewhat below the neckline. Okay, and then we had Eagle. Eagle, simply that's over 81. I said a break over 81, and you can see this stock, literally that's the definition of explosion. That stock took out 81, and in 1 day, same day from taking that out, it went up. Let's try to capture it here with the move. I can, I'll have to move that line if we get on 81. Up, I'm on the wrong tool here. Okay, there's 81. That day, it gained 70%. And from the point, if you took it at the 81 breakout and hit it, this is a nice resistance level we tagged today around 350. 332%. So there's a gain of 332% in 2 days? Tremendous what these stocks can do. But again, a little too much, a little too fast. Here's a longer term downtrend line that could be hit in the next couple days. I mean, that's the thing. If you short it here, if you got a shot at 350, I doubt it'll give you another shot today. It's possible, but that would be an objective short level. But if it takes that out, there's not really a lot of resistance. That's an old line. Let me remove that line there. Your next level is right here. And I would expect a significant reaction if and when we hit that trend line. I doubt we're going to go on and move up 400+% in a couple days and break this out and keep going. So at best, if we took it out, we'd probably come back in, either fail that breakout and move back below it or back test it. But either way, gives you an idea of the explosive nature. And there's a trade idea. If you got a shot off. Again, that's hindsight. I should have got this video out, or at least on this one. There were a couple that are still trading ops. But that one, off that 350 level is probably going to pull back here to the 244-ish level and can easily come back into 168. These momentum traders, they scurry like roaches when the lights come on. As soon as that momentum's out, they fly out. And it's because these stocks are so low priced, they're so thin, there's not a lot of shares out there, and that's why you see such big moves in them. Just like the miners, if you look at the market cap on a lot of those, especially the smaller mining stocks, it's just not a lot out there. They're small market caps, so it doesn't take a lot of buying or selling to drive the prices up or down in quick order. Okay, and the last one I mentioned before I posted this group here, I had put up an unofficial trade idea for Salt. That's Scorpio, and I said over a move over 406 is likely to take it up to the 690 area. This is the 406 line, so you can see it took it out, and from there it had a quick run up. I mean, once that breakout occurred, it shot up, what is that, about 43%, and has come back in to backtest that level. So I would definitely not short this one here because that's a near backtest of support, or yeah, now support, former resistance, the breakout level. Really wouldn't do anything with this one if you're not already in it. Possible if you still think there's more upside here, you can certainly go long there, and I do think that'll probably play out over time, especially if this risk-on thing holds up. In fact, I'm looking now at the markets. I'm seeing a nice dive in the Qs and the SPY. Everything looks to be going down. So again, these guys will pop when this rally in the market. If it starts to get faded hard, you'll see money come out of these quick. So just trade them carefully, guys. If there's some more out there in the shippers, I just went over my favorite. That was a list of the favorites that I posted the other day. And if I see any standouts, I'll post a chart on it. But at least the ones I went over now, you can see my levels. And if you have any questions, just post it in the trading room, and I'll get back to you as quick as possible. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed.